A trader has not kept proper books of accounts. His position as on 31st March 2013 and 31st March 2014 was as follows. You have the position for 2 years, cash balance, then cash at bank balance, stock, debtors, furniture, machinery, and sundry creditors. During the year, he introduced rupees 1 lakh as additional capital and withdrew 10,000 per month for domestic purpose. Ascertain the profit or loss for the year ended 31st March 2014. So how we are going to do this? So what we have to do is we have to prepare a balance sheet as of 2014 and balance sheet as of 2013, and that will enable us to understand what is the opening capital and what is the closing capital. Okay, then the difference between the opening capital and closing capital adjusted for items like additional capital and drawings will enable us to find out whether there is a profit or loss. So first what we'll do, we'll find out what is the capital position as on 31st March 2013. So we have to prepare a balance sheet as on that date. Okay, so we'll have that here. Balance sheet of Mr. So and so as on 31st March. So let's capture one by one. We have cash and bank balances 75,000. So let me capture that. Cash and bank balances. How much? It is 75,000. Then cash in hand. Okay, so probably I think I should correct this. This is only cash at bank. Cash at bank is 75. Then cash in hand. How much is that? It is 5,000. Then comes stock position, which is 5 lakhs. Sundry debtors 2 lakhs. So we'll have that stock 5 lakhs. Then sundry debtors 2 lakhs. Okay. Then furniture 50,000, machinery 4 lakh, furniture 50,000, machinery 4 lakhs. Then there is a sundry creditor which is 6 lakh, so that should go to liabilities. Sundry creditors, and that is 6 lakhs. So now what we have to do, we have to total the higher side, and we note that on the asset side there are a lot many items, so we'll total that, and the total works out to 12 lakh 30,000. It means on the liability side also we should get the total as 12 lakh 30,000. So the difference between this total and sundry creditors can be called as capital. So we'll call it as capital, okay, as on 31st March 2013. So it is as on 31st March 2013. And how is that? It is 12 lakh 30,000 minus 6 lakh. So this is the position as on 31st March 2013. Now we have to find out what is the position as on 31st March 2014. Let's do for 31st March 2014. I have the structure ready here. So we have to pick up each and every information. Cash at bank. So what is the information in 2014? It is 50,000. In hand, it is 10,000. So we'll capture that 50,000 and 10,000. Okay. Then there is a stock of 3 lakh 25, debtors of 4 lakh. Stock is 3 lakh 25,000, debtors is 4 lakh. Then there is a furniture. How much? Furniture is 50,000, machinery is 4 lakh. Furniture, let me just cross check. It is 50,000 and machinery is 4 lakh. Machinery is 4 lakhs. Okay, so this says the total assets are 12 lakh 35, and there is some sundry creditors. How much is it? 7 lakh. It is 7 lakh. So now we'll look at the total on the higher side. The total on this side is 12 lakh 35, so that is copied here also. The difference between this 12 lakh 35 and 7 lakh is going to be the closing capital. That is capital as on 31st March 2014, that is 12 lakh 35,000 minus 7 lakhs. So we get 5 lakh 35,000. So now Let's do this comparison. Look at here, this is capital as on 31st March 2013, which is 6,30,000. Then as on 2014 is 5,35,000. Let's highlight in a different color. So 2013, 6,30,000, 2014, 5,35,000. Okay. Now we have to find out whether they have made profit or loss, and how we are going to do that. Compare the opening capital with the closing capital. That is 5,35,000. Opening is 6,30,000, closing is 5,35,000. So on look, what we understand is capital had come down, but question says there is an additional capital of 1 lakh. Okay, and he also had withdrawn 10,000 per month. So the closing capital of 5,35,000 is after receiving additional capital of 1 lakh. It means before receiving, or say this is after receiving, if that 1 lakh is not received, then closing capital would have been 4,35,000. Okay, and this is also after the drawings of 10,000 per month for 12 months, that is 1,20,000 has been taken out of the system. Had that not been taken out, then this capital would have been higher by 1,20,000. So all these have to be adjusted. So what we'll do, we'll take will prepare a statement called statement of profit or loss of Mr. for the year ending 31st March 2014. Okay, so in that first we'll capture the closing capital. What is the closing capital we have? Let us capture the amount. Just now we have calculated, it is 5,35,000. Now this figure was arrived after subtracting the drawings made by the trader. So let us add back that to know what was the capital before the drawings. Okay, so add drawings, and how much has been drawn? 10,000 has been drawn for how many months? For 12 months. Okay, so it is 10,000 into 12. 10,000 multiplied by 12, 1,20,000 had been drawn. Okay, so now let us total this. We'll call it as a subtotal. We'll call it as a subtotal. Now let us understand that this capital was after receiving an additional capital of 1 lakh. Had that capital not been received, what would have been the position? So let us subtract and see. Let us subtract the additional capital. Okay, so what was the additional capital introduced? It was 1 lakh. Okay, so if this additional capital was not received, then the position would have been 6,55,000 minus 1 lakh. The position would have been 5,55,000. Okay, so this would have been the adjusted closing capital. Okay, now we have to compare this adjusted closing capital with opening capital. And from where we can pick up the opening capital? We can pick up from the balance sheet 2013. So let's pick up. We'll go to balance sheet 2013. Here we have opening capital 6,30,000. Look at here, your opening capital was 6,30,000, whereas closing capital is 5,55,000. Capital had come down. Why? Because of loss. So what is the loss? Loss is nothing but the difference between these two. That is your opening capital minus closing capital, or to show the loss, that is the negative sign, the minus sign, what I'll take is closing capital minus opening capital. Okay, and if closing capital is greater than opening capital, it will give you a positive number, otherwise it will give you a negative number. Since closing capital is lesser than the opening capital, it will give you a negative number, and this indicates it is a loss. This indicates it is a loss.